My goodness, the Shiba Inu has accomplished the unthinkable. A downturn that spanned more than a year and a half has finally ended after 728 days. Is this the beginning of the long-awaited bull market? That is the major question now. What's happening? Let's find out. Important notice. Above a crucial support level, Shiba Inu has shown remarkable tenacity, suggesting the token may be getting ready for an upward breakthrough. There has been a recent uptick in optimism across the cryptocurrency market, and investors are watching this development with great interest. But why is this specific action so intriguing? An optimistic and increasingly confident investor base is the driving force behind a Shiba Inu bull market, which starts with a period of consistent price growth. This is about more than simply the numbers for SHIB holders. It stands for the possibility of witnessing a dramatic rise in the value of their tokens, which might result in huge financial gains. Investors are able to purchase and sell with less price slippage when liquidity improves due to increased trading activity during bullish times. The good mood that accompanies a bull market is just as important as the monetary gain. A positive attitude swiftly permeates the neighborhood, drawing in additional investors as a result of the domino effect. The Shiba Inu community is starting to take the initiative seriously, seeing it for what it really is, a meme coin with real potential. All throughout the ecosystem, new projects, listings, and collaborations are encouraged by this infectious enthusiasm. Shiba Inu's ascent adds to the growth and diversification of crypto portfolios that own SHIB. From a portfolio standpoint, the coin is aiming for new all-time highs, which might eventually reward early adopters and long-term holders with hefty returns on their investments. It gets even better from there. Major players, whales, and institutional investors, in addition to ordinary traders, often take notice when a coin like Shiba Inu begins to trend upwards. The Shiba Inu ecosystem can benefit from increased exposure, more users, and better fundamentals as a result of this rekindled confidence and increased visibility. This most recent event has set off a tremendous surge of whale activity, if we must mention whales at all. The Shiba Inu whale population has recently gone through a dramatic increase, according to scientific evidence. The news was dominated by a single whale who in the span of a single day invested more than $50 million into the cryptocurrency market. This investor sent $10,000 worth of Ethereum and $60,000 worth of BNB, all withdrawn from Binance, in the span of 24 hours, for a total of about $20 million and $13 million respectively. Shiba Inus were the third most valuable asset to the whale, along with an incredible 300 million SHIB tokens, worth about $2.5 million added to their wallet. Fascinatingly, this whale didn't start investing in digital assets until around June 8 of this year, yet in just 17 weeks, they amassed a portfolio worth almost $53 million. What does this whale know that we don't? That is the big question now, isn't it? Is it possible that something big is going on behind the scenes that the public doesn't know about? Is this a sign that regular people should start buying Shiba Inu dogs like the whales do? Here we can investigate. Subtle but significant bullish attitude is conveyed when a crypto whale invests substantially in a short period of time. Whales are a special kind of trader. They can delve farther into possible catalysts, get access to top-secret market research, and use complex analytics. Rarely do they act on impulse. The more common approach is to build them on in-depth analyses of past market behavior, current price cycles, and future prospects. When a whale buys a lot of an asset, it usually means they're confident in its future value. Their strategy is to find price zones where they think the asset is being mispriced by the market, and then they buy when the asset is discounted. When whales buy in bulk amid price drops, they do double duty. They set themselves up for future profits and discreetly influence the market by driving up demand. The acquisition of this whale occurred at the perfect moment, suggesting a bright future in the months to come. The market takes notice of whale behavior. Other investors may follow suit if they see their moves as precursors to a big surge. Price increases induced by momentum can occur when buying pressure is amplified by herd behavior. Additionally, whales usually think in the long run. Whales who believe in the token's development potential hold for months or even years, unlike day traders who want immediate returns. Being patient usually pays off in the end, particularly when the token's value increases due to burns, new collaborations, or upgrades to the ecosystem. Nevertheless, investors ought to exercise caution when dealing with whale activity. A bullish signal, it is not necessarily a portent of future success. Volatility and unpredictability persist in the cryptocurrency market. Price drops followed by price spikes are possible, even if a whale buys. Before making any judgments, investors must conduct their own research, carefully examine trends, and manage risk sensibly. Regardless, the behavior of this whale is fascinating. It's likely that they're taking action based on inside information about something significant, like a new alliance, an upgrade to the Shiba Inu ecosystem's infrastructure, or a listing on an exchange. Insider trading is a major and unlawful behavior in the cryptocurrency industry, and some may even suspect it. Using substantial non-public information to make trades is known as insider trading. Basically, it's getting an unfair advantage by making use of confidential information that the public does not have access to. Because of this, market transparency and justice are compromised, and some people benefit while others suffer. U.S. securities regulators have made it plain that insider trading rules also apply to cryptocurrency exchanges. Anyone or any business found to be involved in this conduct faces heavy fines or even a complete ban if caught. The decentralized and pseudonymous character of blockchain transactions makes it more difficult to spot insider trading in crypto, but regulators are increasing their vigilance. To prevent fraudulent trading and maintain trust in the market, exchanges and blockchain analytics companies are collaborating more closely than ever before. Having said that, insider trading isn't always included in big transactions. The statistics, trends, and patterns are all that some investors care about. Because their actions typically indicate faith in a project, many traders keep an eye on whale wallets. Crypto analysis now routinely includes tracking whale activity due to blockchain transparency, allowing anybody to trace transactions. Many people start talking and speculating when a whale makes a purchase. Is a big announcement in the works? Does anything like a burn listing or product launch have any dates in the near future? Such shifts often cause the market to become excited and, on occasion, even launch temporary rallies, even if the reality isn't always obvious. Retail investors, though, need to exercise caution. Market manipulation is possible when whales buy in bulk to create a flash and then sell when prices spike. If the whale's aims are different from yours, blindly following them could result in losses. The trick is to employ whale tracking in conjunction with other market analysis tools, not as the only one. Listen up, crypto investors, I have a fascinating idea for you before we end up. Many people in the digital asset industry liken investors to 4 different kinds of fish: dolphins, octopuses, jellyfish, and sharks, etc. The term shark refers to an investor who rides the wave of a coin's popularity to rapid success before jumping ship before the market stabilizes. They think strategically at all times, work quickly, and don't let themselves get emotionally invested in anything. In contrast, an octopus reaches out to a number of different tokens in order to spread their bets and reduce their overall portfolio risk. These investors support multiple initiatives simultaneously. They aren't loyal to any one place, and are always looking for new chances. Finally, we have jellyfish. These investors may have modest portfolios, but they make a big splash. In many societies,